And welcome to ETF Edge, your go-to place for everything ETFs. I'm your host, Bob Pisani, and once again, this time only two, of the very best in the business with us. First, Dave Noddick, my old friend, CIO and Director of Research at ETF Trends, and Burton Malkiel, who's a Professor Emeritus of Economics at Princeton University and author of the legendary investing book, A Random Walk Down Wall Street. Professor Malkiel was one of the first to ever note that an average investor should just stick with index funds. That was way back in 1973 when the first edition of Random Walk was first published, and it's now in its 12th edition. Guys, thanks very much for joining us. Normally, I'd start with the ETF question or something like that, but I got to start, guys, with the markets right now, down over 800 points in the Dow Jones Industrial Average, and really been trending down for a while now. Professor, could you just give us a minute of your thoughts on the markets right now? I know you pioneered the random walk concept, but it certainly seems like the market is reacting to the news of stimulus or the lack thereof, and the fact that the reopening story for the moment is not going very well.
No, exactly. I never said the market did not react to news. It does react to news. But true news is something you can't predict from the past. And that's one of the reasons why the market behaves somewhat randomly. What's happened is there was a much larger spike in coronavirus cases than we had anticipated. We had anticipated there would be some stimulus passed before the election. That does not seem to be the case right now. And so the market is selling off. But look, what we do know is that at some point, the virus will be contained. At some point, we will have effective treatments. At some point, we will have an effective vaccine. At some point, we will get stimulus, maybe not before the election, maybe not even before the new administration comes in. But at some point, we will get the stimulus. And so I say to investors, don't try to time the market. Certainly don't sell out now in view of the market down over 800 points. Stay the course. And the best investors are ones that don't try to time the market.
And Dave, you and I talk about this all the time. And certainly today, it doesn't seem to matter whether you're high beta guy, a low volatility guy, a momentum guy, a value guy, a small cap guy, whatever. Pick your factor. It doesn't seem to matter that much today, Dave.
Yeah, it's all going down. And, I think that part of this is a bit of a recognition that the hope we had that the K-shaped recovery, for lack of a better term, was going to become a little more homogenous. I think that's going out the window. We've got some big earnings coming out this week, folks like Caterpillar. I think that's getting a lot of people focused on industrials, which have had a great 3-month run and are one of the things really taking it in the teeth today. I think people are just coming to grips with, as Professor Malkiel is saying, the virus is going to be here. Stimulus isn't, at least for some period of time. And that leaves us really on the back of what companies are actually able to do. It's hard to get behind industrials, energy, and those sectors that have really been hurt today.